following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, but if you think about, you bring about whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, and let's make it a great 2016 as we're kicking the 2015 year off, kicking that back and moving forward to 2016. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials down 59, NASDAQ off 22, S&P's down 9.5, gold contract down $8.20, trading at $1,059 an ounce. Silver down 8 cents at $13.84 an ounce. Platinum down 20 bucks at $8.68 an ounce. Copper flat at $2.14 a pound. Light sweet crude down $1.25, $36.62 a barrel. Bonds 10-year down 2 ticks, 125.18. The 30 off 3 ticks, 153.06. And King Dollar up 182 ticks, 98.33. The euro is up 4 at 109, and the yen is trading at 120.54. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a sideways market out here. We got light volume. We got holiday trading, all of the above. What the S&P hasn't been able to do, even with holiday trading now, is get over this 208.48 inside the SPY. That was where we came. That's the last high that we came down on the 17th of December. Yesterday, you get to the 207.79. You do 92 million shares versus this 173 million. Bottom line, it doesn't look like it's going to be able to get over that high. Never mind the actual May high. The May high out here inside the S&Ps, the SPY is registered out at 213.78. We get into the NDX 100, the 3 Qs. 3 Qs out here trading at a price point of 113.78. And this is going to be, what the 3 Qs did is this. The 3 Qs they closed yesterday at 114.30. The high was 114.54. They were testing the same trade date there, which is the 17th. We did 27 million shares versus the 17th to 45 million. You're back underneath that. Same setup there. The Qs have been the stronger indices, no doubt about that. Bottom line, though, can't handle higher price. Gold contract. What do we have with gold? They're whacking gold out here today, but you get light volume as we're pulling back. So, gold contract out here. We're trading at 1060 right now. You've done 88,000 contracts. You're coming into huge amounts of contracts. We're coming into 123,000 contracts. That was from December 18th. The December 17th, we had 169,000 contracts, and going back to December 3rd, you had 174,000. So the gold physical market needs a lot more contracts in order to break down. Now, what we have not got is the rejection of lower price yet. So I expect more than likely tomorrow it's going to probably try to get into the swing low, and we'll see, in fact, if it can do a rejection of price or it just takes that baby out. Either way, I do expect you can have lighter volume. Silver. What do we have with silver? What we have with silver is this. Silver is having a hard time getting above the $14 area. What silver has done 3 separate times now, and excuse me, and in the last 3 weeks, is get down to its lower low. The first 2 times it did reject lower price. Thus far today, we've got the 1375. You've done 22,000 contracts. You're going against 45,000. So the volume's correct right here. What I'd like to see with silver before the close out here today is to go up 1 more penny. Does 1 more penny mean something? It does. The reason being is that when we came down on Monday, you got down to 1385. Right now we're at 1384. You want to get back. If silver gets back inside that, your probability goes higher that once again you're going to get back inside the $14 area. That would be 3 separate downdrafts or false breaks to the downside. Now let's go over and take a look at the bond market. These bonds, what we've had with bonds is this. The 10-year, 10 and the 30-year yesterday came down with velocity. It had the price spread. It did not have the volume. What we've done out here this morning, or today rather, we've done 633,000 contracts. You're going into 1 million contracts as well as 1.6. We got to a low of 125.14. You're at 125.20. You know, it's got to get a lot higher, but we'll see how it basically comes into these swing lows. Thus far, it's coming into swing lows with a lot lighter volume. It has rejected lower price, but the 10-year, that's only by 4 ticks. That's not a big deal. We go over to the 30-year. We take a look at the 30-year. 30-year looking a little bit better, and the 30-year does lead. 30-year, we got down to a price point of 152.24. You're at 153.09. It has rejected lower price, dramatically lighter volume. The 30-year has done 135,000 contracts versus 347. You know, so bottom line is that, let's go to King Dollar. We take a look at King Dollar. We have a King Dollar. King Dollar got over the highs of yesterday. Right now, you're underneath them. King Dollar looks to be building an ABC structure on the way down. You get a couple of them, actually. You get the larger one when King Dollar got smoked on December 3rd. Now you get a smaller one that's setting up, and I suspect, number one, you're going to be down to the 97.22 area. That's the last low on December 15th. More than likely, we're going to see it make our way down into this October 15th swing low of 94.05. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of TFNN, folks, we get a couple great announcements here. As we are kicking off 2016, we have a new schedule, new TV Tiger schedule for you, new audio schedule for you. Starting on January 4th, you, at noontime, TD Ameritrade Thinkorswim is going to be broadcasting 5 days a week. 5 days a week, Monday through Friday at noon. That's the first change. The second one, my son and I, we're going to be doing the 10 o'clock show on Tuesday, Wednesday, and Thursday. On Monday and Friday, we're going to be doing the Bull Bear Buying Option Hour. That's myself, Tommy, and Daryl. And then one more. As soon as we come back, we'll give you the last one. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are down 53. You get the Nasdaq up 18. S&Ps are down 9.5. And as we were going through our new schedule, folks, come January 4th, we are actually going to start broadcasting at 7 a.m. on Tuesdays and Thursdays. Living the Primal Lifestyle with Nico and Paige. Keeping You Healthy is going to start off at 7 to 8. It's a beautiful thing. So on Tuesdays and Thursdays, we're going to broadcast live from 7 o'clock in the morning to 6 in the afternoon. Monday, Wednesday, and Friday, it's 8 o'clock in the morning to 5 in the afternoon. And what you have is, if you are an option trader or you want to learn about options, folks, that Thinkorswim program at 12 o'clock is extraordinary. It's 12 to 1. They're going to go 5 days a week, no commercials in them. And then what we are going to have is that the scheduling of each hour also is changing slightly, meaning that there's less commercial breaks. During my program, the rest of the programs are going to be set up like my program is, which has less breaks in between it. So check it out. The front page is TFNN. We do appreciate everyone out here growling and prowling with us, and we look forward to a great 2016, a prosperous 2016. Now, let's go over and we take a look at the NDX 100 as to what's moving the NDX 100. This is what you have. Tesla is the mover out here today, even though the NDX 100 is down. Tesla's up $2, trading at $239. Seagate Technology is up 30 cents. Autodesk is up 45. And Liberty Global is up 25. Taken away from it, C-Trip, it's a couple of the China stocks. C-Trip is down 109. JD.com is off 63 cents. Yahoo is down 53. And CERN is off 90 cents. Inside the Dow Industrials, the strength versus the weakness inside the Dow. The strength is Walmart, dead cat bounce, that's up 25 cents. You get Big Blue, another dead cat bounce, up 46 cents. Merck is up 18 cents, and you get Home Depot up 31. Taken away from it on the way down. Nike is down 87. ExxonMobil is off $1. You have Chevron off $1. And Intel is down 33 cents. If we do go over to that oil market, excuse me, folks, CLG. So we take a look at oil. Oil numbers come out today. Big build-up versus a drawdown. The build-up was 2.6 million barrels versus they expected a 2.4 drawdown. So that's quite a differential in what they're looking for. Oil today, we've done 237,000 contracts. We are at 36.65, and this baby is looking like it wants to go into the lows of this contract, and the high of this low is 36.10. The low is 35.35. I expect that more than likely we're going to see that get into that area. If we just take a look at the, that has a couple high volume swing, some intraday lows there. Okay, so let's take a look. Crude oil inventories at the biggest U.S. hub rose to a record high last week, with domestic production stayed elevated. Amazing. Supplies at Cushing, Oklahoma, the delivery point for oil futures traded in New York, climbed to 63 million barrels. That's the highest level since, this is a trip. Check this out, folks. This is the highest level since they've been reporting it since February, since 2004. The gain is the 8th in a row. West Texas Intermediate, the U.S. benchmark, fell for the second day, heading to a yearly loss of more than 30%. Oil rigs have dropped by more than 60% in the year, but U.S. crude production hasn't declined. Instead, they rose for a third week to 9.2 million barrels a day. Horizontal drilling and fracking have unlocked supplies in shale formations in North Dakota, Texas, and other states. So bottom line is that they're still pumping oil out, and they're pumping oil out in a big way. So check this out. This is going to be pretty cool watching this shake out. So Cushing has a capacity, it has 63 million barrels in it right now. The capacity is 73 million. So you're talking about only 10 million more. And I believe, let's get this, I got to get to this number, but I believe, let me see, oil. I just got to get a second. I believe it was 4.2 or 4.4, 10:30 this morning. Here we go. Okay. Well, not that one. I want to get the exact number because this is pretty wild that you're talking about they only can fill 10 million more barrels. I'll find it on the first break to get you the exact number. But bottom line, you can see what's going on here. That's really close to capacity at this point. And of course, you're at capacity. Well, they got to draw that down in order to, basically get the price of oil moving into a higher price. We go take a look at ExxonMobil. Exxon's down $1. And this tried to get the higher price with lighter volume. So this is a situation that this is going to more likely make a run now for 73.79. That's the last low that was established out there on December 8th. We take a look at Chevron. Chevron is the same type of setup. Chevron got to 90.98 today. It's at 90.32. That wants to run down into this 84.25 level. And we'll see as it gets down there if, in fact, the volume expands. Big Blue, IBM. That's one of the leaders out here today, but of course, Big Blue is an absolute mess. The Big Blue has traded down. It's been a one-way trade since $215. You're at $140 right now. It's pretty amazing, actually. Listen, it was indicating that this thing wants to, get first off. When you take a look at it down to 133, and you're going to see that went to 131. This is pretty wild. If you do have my book, The Art of Time in the Trade, folks, what you're going to see is the last time it had any volume in it goes back to May of 2010. The high there was 133. It comes down, it whacks 137, then it gets to 131. This thing is still building cars. It looks like it's going to build cars to get it to 116. So still problems out there. Walmart is also having huge problems catching a bid. Walmart is at 61.86 right now. That's also been a one-way trade down from 90. Want to hear a number? Listen to this number, folks. This is amazing. This number came out this morning from the Retail Federation of the amount of sales that were done over the holiday season. It's mall traffic, 15% less. That's a huge number. I mean, you're talking about a big number. So there's going to be a few problems in paradise as these numbers start coming out. at the end of January. Most of these retailers for the quarter ending December 31st, those numbers will come out at the end of January, and the real kicker is going to be number one, have they made those sales up online? And I suspect most of them haven't. You know, Amazon, no doubt, Amazon is the king of retail. Amazon broke topside yesterday. It's still at its highs right now. That it broke out from 684. Right now you're at 692. And you're paying up for Amazon. There's no doubt about that. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 61. You get the NASDAQ off 21. S&Ps are down 10. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we take a look at a few of these commodities out here today. You have natural gas is down 6%. You got orange juice down 5%. Heating oil is down 3%. You got gasoline down 2%. Crude's off 2%. On the way up, you got sugar up 2.5%. Coffee's up 1.8%. Lean hogs are up 1%. The rest of them are kind of flat out here. Inside some of the Dow stocks, what do we have? You have Honeywell is down 80 cents. You got United Technology off 41. The Boeing is down 81. Big Mac is down 20. JP Morgan is down 37. And some of the higher volume stocks, and we definitely have low volume out here today. I expect you're going to have lower volume tomorrow. You have Apple down $1. Weight Watchers is up $3.40. You got Alcoa down 20 cents. No big numbers out here. That's the real bottom line. We go take a look at the XAU and the HUI inside the gold market. These guys are hanging tough. XAU right now is down $1.06. We're at $45.09. This is backing into a big sign of strength. So you're backing into the sign of strength from the 18th of December. Now, the 18th, we had 103 million shares. That's pretty cool because, yes, they were backing down with 18 million. I expect to get lighter than that right now. Gold Bugs Index. What do we have with the Gold Bugs Index? Same type of setup. You're backing into 39 million shares at 107.74. Yesterday you backed down with 9.3, and today I suspect you got less. So the gold and silver equities actually are set up better than the actual metal right now. So we'll see how this thing shakes out as we come into the new year. If we go over to the South African Rand, what you have with the Rand, and this is where the South Africans miners are going to continue to catch a bid in a big way. This is what you have. The Rand is trading at 15.5 Rand dollars to $1 US. That is a monster, folks. We take a look at Harmony. We have with Harmony. Harmony's down 2 pennies right now. That's after coming off a low, however, which is, it's unusual it's down at all with the Rand being that weak. But the Harmony has just gone from 53 cents November 20th up to $1. And what happens inside the context of the South African equities is that they get paid, these are the miners, they get paid in US dollars, their expenses are in Rand dollars, and the differential in price is just astronomical because when you bring the Rand back, this is just wild, folks. And if depending where you are in the cycle of investing and looking at currencies, this takes a little bit to wrap your head around, but the currency valuations, this is a fundamental deal now, the currency valuations as to how companies can make money are huge. The differential's huge. Now, in South Africa, it's particularly huge because what happens is this, is that if we go back to 2011, the Rand was trading at 6.5 Rand dollars to $1 US. So even though in 2011, the gold price was the highest in US dollars, guess what? In Rand dollars, it was not. So the South African mining companies were bringing less to the bottom line. Now, I'll put the Rand dollar up and you can see this correlation because the correlation is unbelievable, actually. So if I take the GC, I'm going to put the gold contract up, and first I'm going to put it in Rand dollars for you so you can see this correlation. So bring this back 5 years. 2011, there it is now. So picture this. In Rand dollar terms, it was around 9,100 Rand dollars, the high. Right now, in Rand dollars, folks, it's 17,000. Yeah, 17,000. And when you take someone, and so what happens in South Africa is also this. The way the law is that what you have to do is that you can sell, of course, well, you're selling gold in US dollars. You have 90 days, and within 90 days, you got to turn around and change that at the central bank back into Rand dollars. What ends up happening, of course, is that when your expenses are in Rand dollars and you have 27,000 employees, you can see what happened. Your expenses have just got cut in half in an extraordinary way, too. Pretty amazing. Markets out here, they just took them south in a big way. The thing that's amazing, Tommy and I, we do a show at 10 o'clock in the morning. And if you haven't heard the show, folks, great show. You can get it right on your cell phone, TFNN.mobi. And, when I was bringing up even the newsletter this morning, it was intriguing that the DAX in Germany had given back 100% of the move it had done yesterday. The DAX was up 1.1% yesterday, gave it all back. Our own markets very well probably will give it all back too. That's what it looks like, because someone just hit this market and hit it in an extraordinary way. When we take a look at the S&Ps, what you're going to see is that the S&Ps right now, the future, we are down 17 right now at 2056. This sell, this is not no retail sell. Someone just sold this down 9 points. They hit the futures market. They hit it big. It went from 2062 to 2053. They're catching them. They're catching them basically. Holiday trading in itself. Okay, markets get pushed around. My take on this deal. The larger take on this is that we have high volume swing lows. If you go to Europe, you have high volume swing lows. You go to Asia, it already failed at the high. Oh, as we talk about Asia, so check this out, folks. This is going to be wild. We come back to work on the 4th, which is the 5th Asia, right? Well, on the 9th, not Asia, I'm talking about Shanghai now. On the 9th, on January 9th, thus far, when the Shanghai market was crashing, in June, the regulators put a regulation on the Shanghai market that if you own more than 5% of an equity, you couldn't sell that equity. That is expiring January 9th. We'll see if, in fact, they're going to extend that, but as thus far, January 9th is going to expire. Now, the Shanghai market is already below where they had actually put those regulations on. So we'll see what gets done as we come into that, if they extend it or if they let it float. They let it float, thus far, what you still have in that Shanghai market is that you have high volume swing lows. We go over and take a look at the NASDAQ futures. What you have with the NASDAQ futures, we are right where this market opened yesterday. At 0930, the market went from 46.38 to 46.53, and guess where? We are at 46.53, and we're down at 46.53 with volume. What that's going to set up is at the bottom that the market has plenty of time, because I think we got 20 minutes. Yeah, you get 22 minutes coming into the close. That's going to be plenty of time to basically give it all up, meaning come down to 46.38. It'd be pretty wild if that's what happens. We go over to the S&Ps. We take a look at the S&Ps, same setup inside the S&Ps. Actually, the S&Ps already took it out. Wow, what a trip this is. Yeah, the S&Ps blew it away with volume. They, look at that, gave it all back. Yeah, we were at 2060, we're at 2057 right now. See ya, don't want to be ya. You stay right there, folks, we'll come right back. Dow's down 106, NASDAQ off 35, S&Ps are down 15.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 89. You get the NASDAQ off 32. S&Ps are down 13.5. And let's go over there and take a look at this, because there's no doubt a couple of the targets in the den are saying, who pulled the plug? This is quite a trade, folks. But this is what does happen in holiday trading. You have light markets. They're thin markets. Thin markets mean that you don't have a lot of bids and offers on each side of the market. And if someone decides to push this baby around, they can push it around. They can push it around very quickly. In this case, that's exactly what has just got laid out here. When you take a look at it, this is what you have. When at 3:30, we're at 2062. They run it down to 2053. And monster volume. So your probability goes that even coming into the close out here, that we're going to run into that lower number once again. It's bouncing off the 2053 right now. I just popped up 6 points. As we go back to the lows of yesterday, at 9 o'clock in the morning, we were at 2060. 9:30 rather. At 8:30, we're at 2059. That's right where we are. So it's given back everything that it gained yesterday inside the S&P. We go over to the Dow Industrials. What you're going to see in the Dow, Dow thus far is down 97. The low of yesterday was 547. And we're still 80 points over that right now. Your NASDAQ Composite, we take a look at the composite. The composite has, pretty amazing, man. The composite's almost given everything back. We're at 5073, and it would be 5041. So it's still about 30 points higher. There's going to be the S&Ps. Let's see. Right now, the S&Ps, folks, you're down 14. If they get down 19 by tomorrow, that's only 5 more points. That would put the S&Ps flat for the year. The NASDAQ Composite thus far is the only one that actually is up for the year. Inside, we'll take a look at Apple for a second. What's intriguing here is that I'd like to really see what they hit Apple too. So when they did that trade, so what ends up happening with a large futures trade, by the way, folks, is this. You have a large futures trade. That large futures trade being implicated at 3:30. It's in the S&P. So what ends up happening is that when that happens, simultaneously, all those computers take over and say, okay, you sold the S&P down. Then what ends up happening? Well, what ends up happening inside the ETF structures is that means that the SPY, and this is done automatically. The SPY is to get sold down. And of course, the SPY just went from 206.55 to 205.76. As that gets sold down, what ends up happening is that the weighting structures that are inside the SPY get sold down. This is where you have the aspect of the chicken or the egg. What's coming first? Because whether you're going up or whether you're going down, what ends up happening is that you want to understand those correlations inside the futures market, because the futures move the sectors, then the sectors are going to move the individual equities, because that's how big the ETF structures have gotten in the last 10 years, and particularly, the last 10 years. That, once you really understand the sectors and the ETFs, it's pretty cool, because let's say that you get strong or weak stocks. That is not a individual decision to sell the strong or weak stock. What it is that when the future gets sold, the ETF has to get sold. As the ETF has to get sold, the individual equities have to get sold. That's on the way down. On the way up, the futures get bought. The SPY, the diamonds, everything gets bought. Guess what? Every single one of those stocks inside that sector, inside the ETF, has to get bought. Okay? So the correlation is pretty direct. It's fast, it's furious, it's all of the above. And in this particular case, what has happened, and depending on how long you've been in the market, what has transpired here, thus far, we have had surprises to the downside. That's how this thing has been shaken out right now. Because what we have had is that the thing that's amazing, I was bringing up this morning, if the Dow Industrials, so check this out, folks, this is pretty amazing. We're still right next to highs, okay? That being said, the most amazing part to me is this, is that May 20th is the high in the Dow. That high was generated at 18,350. But from that point on, the market has tried to get into higher highs. It has failed each and every time. And when I say failed, it's just so crazy because it got so close to not just getting to the high, because it didn't get close to getting to the high. What it got close to is taking out the previous high. Now, when we take a look at this, what you're going to see is that we have 1, 2, 3, 4, 5, 6, 7. You have 8 lower highs that have been established inside the Dow Industrials since May 19th. And the last few of them, have been very close. Well, here, the high itself, we haven't got close to the high. That's 18,350. That was January 20th. We get down to 17,690. Now you do a counter trend bounce and you get up to 18,188. That was established in June. We went down again. You went down to, you went down 500 Dow points. It rallied all the way back and got to 18,137. And you can see that was 50 points away from the last high. Then the market just got trashed. The market went from 18,100 down to 15,300. Okay, so that's what, 18 to 15? That was 18. Yeah, 2,800 points. Okay, so now watch what happens now. Market rallies. Market gets to 17,977. Well, the last high was 137. So it was 140 points off the last high. Now watch this. This is where this gets wild. So the number you're dealing with is 17,977. That's still down from the highs. We go down, we come back up, we go to 17,914. Can't handle it, doesn't get to the high. We go down again, we come back up again to 17,866. Can't handle it. Go down again, go back up again on the 17th of December to 17,796. We go down again, and guess what? Yesterday, 17,750. And my point is this, is that when it's subtle and you still can't make it, it's a huge heads up. Because what you don't want to, you can do, I was going to say what you don't want to do is understand later as you're looking at that chart that saying, oh, how easy was this? That you've established 7 lower highs since May. And those lower highs have to do with what? Those lower highs, folks, have to do with big monsters selling into the marketplace. It's distribution. This is Tom O'Brien. This is TFNN. You stay right there, folks, and we come right back. Dow's down 94. Nasdaq's off 33. S&Ps are down 14.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 109, Nasdaq's off 38, S&Ps are down 16, and they're hitting those S&Ps pretty good. Dow really is not that bad. You get $100, but yesterday you were up 192. Inside the Dow right now, however, this is what you do have happening. That there's only one equity that's positive, and that's Walmart, which is a dead cat bounce. That's up 11 cents. Every one of them, other than that, are in the red. Inside the NDX 100, what you have is that inside the NDX, the Netflix is down $2.39. Yahoo's off $2.41. The leader is Liberty Media. Tesla is number 2. That's up 86 cents at $2.38. Now at $2.38, though, it's down pretty good from where it was. Tesla had traded up to $2.43, ran it down, and they're basically taking no prisoners kind of on the way down right here. And what we'll see, this is where this is going to be really wild tomorrow, because what you have is this. So picture, if you're a money manager, folks, this is what's going on. You're 4 points away from breaking even on the S&P. Now, there's only 10 stocks inside the S&P 500 that if they own the 10 stocks inside the S&P 500, guess what? They did great. In fact, there's a story. Listen to this. This is pretty intense. Amazon, let me see if I can get this story for you, because there's a money manager at Fidelity that's the leader this year. I was reading this yesterday. Well, I didn't break down her portfolio yesterday, but I was looking at that earlier today, and she was up big money. I mean, astronomical money for a hedge fund, actually. Well, what ended up happening, this was a direct bet on a couple stocks, which is really unusual for mutual funds. 3/4 of the portfolio was Amazon and Home Depot. Bottom line, made a fortune though. That's the bottom line. That being said, when you have direct bets like that, you either make a lot of money or lose a lot of money, and there's nothing wrong with that as long as you know that that's what you're doing. I mean, that's you have that type of conviction. Guess what? You're either going to make it or break it. And in this case, that woman made it. I believe we'll end up hearing about it because as the end of the year numbers come out, this is the best portfolio out there. And if we do look at, let's see. So if I go at the beginning of the year, Home Depot. First we bring up Home Depot. Home Depot start trading at the beginning of the year at 106. You're at 133. Amazon's just a monster, man. Amazon at the beginning of this year. Whoa, look at that. That's what made her money, man, no doubt. Amazon, more than doubled. Amazon went from $310 to $688. Big money. Big money. Big monster money, no doubt about that. Okay, so now to get back to the where the S&P is, right? So money managers are going to sit there and say, okay, hold it. If in fact we're going to go down, I got to start unloading something right now, because if I'm down less than the S&P is down, which is their benchmark, guess what? They're going to be able to say, hey, I did better than the benchmark, and that is all that matters to them at this particular point. Where did you do in correlation to the benchmark? Because their clients call them, the clients can call them and say, listen, I'm down this year. Why am I down? Of course, they're going to say, well, I'm up 1% compared to the S&P. They're going to have a hard time inside the NASDAQ because of the NASDAQ. Even, we're down right now, maybe 1%. We're down 1%. NASDAQ's down 0.8%, because the NASDAQ has, at the beginning of today, it was up 8.5%. Dow right now is down 116. NASDAQ's up 41. S&P's are down 17. You stay right there, folks. We'll be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first talked to you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's kick off a great 2016. And, you just heard that promo about a new format. We changed our format a bit in 2015. Well, 2016, we are doing that again. January 4th, folks, we got this coming Monday. We got some great programming coming at you. We are on Tuesdays and Thursdays. Our man, Mr. Nico Dahan, Paige Holloway. Paige is going to kick off the Living the Primal Edge. That's going to be 7 o'clock in the morning, 7 to 8. On Tuesdays and Thursdays, we're going to go from 7 o'clock in the morning to 6 in the evening, live programming. Monday, Wednesday, and Friday, we're going to go from 8 o'clock in the morning to 5 in the evening. What the differences are each and every trading day is going to be at noontime. If you happen to be an option trader, noontime, TD Ameritrade Thinkorswim is doing a full hour programming 5 days a week. On Mondays and Fridays, the Bull Bear binary option hour is going to be on at 10 o'clock in the morning. Normally it was just on Fridays. That's my son Tom, Daryl Martin, myself. That's going to be done on Mondays and Fridays. And then Tuesday, Wednesday, and Thursday, my son and I, we are going to be doing, of course, Money Masters. So you can check all of that out right on the front page of TFNN. Paige Clark and Nico DeHaan, they're going to kick us off Tuesdays and Thursdays, 7 o'clock in the morning. We're going to keep you healthy right off the bat. Market-wise, let's take a look at it out here. What do we have? Bottom line is, as Terry says in the den, there's no buyers at higher prices. Let's take a look at it, because there's no doubt. I mean, what you have out here is that if we take a look at these S&Ps first, this is what you have. Intraday out here, they just whack these babies, and they whack them pretty quick. The SPY is down. It's down 147. We're at 205.93. And what you have with 205.93 is that when it had gapped away, it was 205.26. Gives up just about everything from yesterday. Bottom line, that looks like, number one, you're going to come into the last day of the year, and more than likely what you're going to see here inside the S&Ps, I believe right now it was 19 points when we started. So right now, I believe that the S&Ps are positive for the year by approximately 4 points, 3 to 4 points. I'll get to that full number. I believe that's where we stand right now. Inside the NDX 100, the 3Qs. What do you have with the 3Qs? Excuse me, folks. 3Qs give up just about everything it gained yesterday. You started out, the low of yesterday was 113.13. You're at 113.27. Bottom line, couldn't handle higher price. Gold contract. What do we have with gold now? What we do have with gold is this. Gold come down on price today. You did have lighter volume, down $7.40, trading at 1060. Hasn't rejected lower price. Now, what we do have is that tomorrow would be the equivalent of coming into a Friday in the gold market. So we'll see how the gold market and the silver market handle these lower swing points. The lowest swing points on gold right now, 1046 from the 17th of December and 1045 from the 3rd of December. In both cases, folks, it's going to take quite a bit of energy to get underneath them. Thus far, you have a contraction of volume. We'll see whether those price points can hold. Silver, what do we have with the silver market? Silver come down hard on price yesterday. I like how it traded today. It got to a lower low. The volume did contract. We did 23,000 contracts today. Yesterday, well, 2 days ago, actually, we did 34,000. So it got under that level. We closed right at 1385, which is a good situation, by the way. Silver has to get back inside $14. The reason that the 1385 is a good number is that is where we came down on Tuesday. You did 34,000. That 34 was going against 45. So that number is a decent number. They both absolutely need, though, is a wide price spread, sign of strength, going top side. Bonds. What do we have with the bond market? Bottom line, bonds continue to want higher price. Pretty amazing, actually. The bond market, if this, what's so crazy? When I was talking about the Dow Industrials last hour and the S&Ps, how the Dow couldn't make a higher high and has made continually lower lows since May. Well, this bond market continues to make higher lows. And if this is it, if this is all the sellers have in the bonds, it's going to be just a mind blow. And this is why I'm saying this. You get a low that was established on November 9th. We're looking at the 10-year right now. That low was established at 125.01. The next low was 125.09. That was established on December 4th. The next low established on December 16th was 125.12, and we'll see whether this was the low that was established at 125.14. You know, it got down there, rejected price. So what has happened is that the bond market has not even made a lower swing point yet. And that in the context of the Fed has raised rates, and they're saying we're going to raise them further. Some of the, we take a look at the King Dollar. Would you have a King Dollar? King Dollar looks like it's a small ABC structure on the way down. What King Dollar has done is this. This is a nice little setup too, by the way. So you have the first large, I think we have two separate ABCs. We have the large one, that's when King Dollar got smoked on December 3rd. We went from 100 to 97. You did a nice counter trend bounce back up to 99.34. Now what has happened is that you got over the high of yesterday where we had some volume. Not higher volume than it came down, but you had an expansion of volume. So yesterday, you did 17,000 contracts. Today it gets over that high, it does 9,700, then gives it up on price. So the A point up there is 99.30, your B is 97.80, so 90, you get about $1.30, which would get you down into the lowest swing point, which is 97.22, and we'll see how it handles that swing point. My larger take is that this looks like it wants to go down to the 94.05 level. The thing that's wild, there's no doubt, folks, is that the correlation, when you put the fundamental correlation together, meaning that the Fed is saying they're going to continue to go up, the dollar should be going up. Technically, the dollar's done exactly what it should have done. It made the whole run, did 100% move for move, backing down. I suspect what we're really going to have here is that bonds just want higher price because the market wants lower price. Something is just laying out here that we'll figure out in the next few months. It's Tom O'Brien, it's TFNN. You stay right there, folks, to come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and let's go take a look at the NASDAQ right now. So what you do have is that the futures are closing right now, and they just pressed it right into the close out here. They're closing them right at the lows. Well, actually, the low is 4643. We're at 4646 right now, and yeah, that's a good sell down. The sell down that happened, folks, is at 330. Well, you had one this morning. You had one at 9:30, where the market, basically sold off right at the open. Then the market just went sideways for hours, and that second sell down at 3:30 was pretty intense. We take a look at the. That must be our man John Logan. You got John Logan on here? Hey, what's going on, man? Sorry about that.
I'm more insignificant than I already thought I was.
No, I can hear you. I can hear you chewing lunch or something, man. I'm only kidding. Hey, listen, folks. Our man, Mr. John Logan, kicks us off every trading day, 8 o'clock in the morning. Now, come January 4th, folks. Okay. On Tuesdays and Thursdays, we're going to actually have Nico and Paige kick us off. We're going to start at 7 o'clock in the morning. So Nico and Paige, folks, have a health show. We decided that they wanted to get up at 6 o'clock in the morning, keep people healthy, at least for a couple days a week, get you ready to trade. So then our man, Mr. John Logan, is going to come on next. And then TD Ameritrade, folks, is going 5 days a week. They are going to be on noon to 1 Eastern Standard Time every trading day. So we get a lot of great programming coming up for you. The Bull Bear Binary Option Hour, which normally was just on Fridays. That's with Daryl Martin, my son Tom, and myself. It's going to be on Monday and Fridays now at 10 o'clock. And then, of course, Tommy and I are going to be doing the Tuesday, Wednesday, and Thursday at 10 o'clock. So what's happening, brother? Happy New Year.
Yeah, Happy New Year to you. I'm just looking forward to the new year. We've been talking to people about not really trading that much past day or two, as
right,
you've been
which
saying
is really
that
smart. That's right, no doubt.
Yeah, and it's the biggest up in the air I think I've ever just. I mean, the market's kind of on the highs. The broad stock market that is. It's going to be. Man, it's just going to be a wishy-washy situation because you're talking about. I heard you previously talking about these notes making higher lows, and we've been talking about that for a while. So what do you do? And
I know, man, it's crazy. And what happens, folks, is that it's totally. They're going up on rates, but yet the bond market will not sell off. It's like, wow, man. Okay, so what's out here? We'll see.
There's so many factors in play too. I mean, this morning, just somebody kind of put a spark in my head about, we're talking about gold and inflation or no inflation and the growth rates of these companies and things normalizing and
yes,
that doesn't bode well for commodities. Also,
no. I thought you brought up a great point. I think it was this morning actually. You were talking about. It wasn't this morning, it was yesterday morning. You were talking about, John has offices in the United States, offices in Asia, and you were talking about the labor structure around the world. And, that's deflationary because, large companies now, you can basically get labor wherever you want it, right?
Yeah, that's been no mystery to anyone. I mean, but it's seemingly becoming, I watch how these, the labor rates of programmers go.
Yes.
And they normalize. And I'm trying to hire people, and I know what the standard rates are in Eastern Europe and what they are in the Philippines and what they are in South America.
Yeah.
Obviously, those are to some degree functions of currency, valuations.
Sure.
But a programmer can get on Odesk or get on, whatever, hireaprogrammer.com or whatever. And, they know what their value is relative to the globe now. And it's not that easy to get the latest the newest languages that are being converted from the old legacy languages, guys who know those new, like Ruby on Rails. That is a very big programming way of doing things now. It's called Ruby on Rails.
Okay.
And people who know that language, even in the Philippines, they command a high price because they're going to go online and say, oh, I can personally bid on things or projects because
that's so cool, man.
Yeah, I mean, and it's just wild to see how these things are normalizing. And people in this country, you make a widget here, you make it, obviously that's been something, and it's just wild to see how these things are normalizing on every different topic, and everybody's trying to create a technical solution for everything now. So
well, what I thought was intriguing, but is that I understood it when you're saying normalizing. What you're really also saying, right, is that competitively it's right across the world. I mean, there's no difference in a competitor. Like when we talk Skype going back and forth with one of your people, it's like right here. You're right there.
And then you start looking at it from a much broader sense.
Yeah,
of,
you do.
If everything's going to technology, are human beings becoming obsolete in general? Like what, and what kind of jobs and can a computer do it better? And those types of things are going through everybody's mind. And a lot of these, what's the guy, Elon Musk?
Yes.
A lot of guys who are really, really smart are out there saying, so many things are going to become automated that, the price of human labor is going to continue to go farther south. And then
that's heavy, man.
You look at these Google glasses, they came out with some things that they've gotten these things reapproved now. And,
okay.
It's just so many technological solutions out there now that I don't see the labor. I mean, they're talking about, Trump's talking about, we're going to bring all these things back on shore. I really don't see that. Even if he does do that, that's not going to be that big of a win because, it's like
because we're in a digital era. No, I agree, man. There's no doubt, man. It's a great heads up too, because what happens, folks, you got to remember something. America got great, is great, because we're smart, and you can flip on a dime. So understand, I love this conversation because guess what? There's plenty of young men and women out here right now that can compete on that level, and
yes.
Guess what? Bottom line is that you get out at the head of the crowd,
Listen, there's not a better place to be than the U.S. You've been all over the place. I consistently go off of the place.
Right.
Not that I want to sometimes, but, this is the best place to be, guys. But to get a perspective on things, to really understand how great of a place it is, you really need to go out there. A lot of people think, oh, China, they're paying everybody $1 a day, and they're
sick, right?
They're sitting in a circle eating rice out of the same bowl. So, I mean, that's not the case.
And they're going to die from pollution. No, I know it's terrible, man. I mean, there's a yin and yang out here in a huge way, man. I mean, there's no doubt.
Go to Shanghai or Beijing. It will completely scare you of what's going on over there. And that's they've been talking about this kind of conversion to the middle class over there.
Yes.
That's going to be a disturbing situation for the way they do things and what people, like societies evolve. It's like, okay, we went through the 50s. Everybody was happy to get out of War II. Everybody was happy to have a small house and go to work every day and be safe. And, now that's kind of, the 60s, okay, the unrest, the population, evolves. I hear the music.
That's beautiful, right? Hey, listen, I want to talk about Raleigh when you come back, too. I've never been to Raleigh. Well, actually, hold it.
You got to go.
I was stationed in North Carolina, but that was...
Vietnam?
Yeah, no, that's off... Yeah, you stay right there. John and I are coming right back, folks. Dow finished down 117, NASDAQ off 42, S&P's down 18. We're going to be right back. It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. John Logan, who each and every trading day, 8 o'clock in the morning, folks, kicks us off at TFNN. Now, you can get that right on your cell phone. So if you're listening right now on your car radio, remember something. Right on your cell phone, TFNN.mobi gets you the full audio. You want to get Tiger TV? Just go to TFNN.com on your cell, hit Tiger TV. You can get the audio as well as the charts. So, where is Raleigh? So I was at Lejeune, but that's like in Jacksonville. Where's Raleigh in relation to that?
So Raleigh, there's something called the triangle. They call it. It's Raleigh, Durham, Chapel Hill.
That's right. That's a dynamic place. Yeah, right.
And there was a really awesome governor of this state for 8 years. His name was Jim Hunt. He's actually from Wilson, which is where I'm from.
Okay.
And I know him and his wife. He decided a long time ago he would set up something really, really good forethought in this, which is kind of the way some of the new incubation kind of centers are going on.
Yes.
And towns are saying, hey, that's the way of the future. He said, hey, we're going to devote a massive amount and buy a ton of land around the triangle. We're kind of going to call it Research Triangle Park.
Yeah,
and
it was so smart. Yeah.
We're going to invite the IBMs, the Glaxo Wellcomes back then, the
sure,
tons of killer high-end companies have big corporate centers out there, and formerly a lot of manufacturing was, a lot of drug developments out there and things like that.
Yep.
So that actually brought in, I don't know if you know this, that area has more PhDs per capita than anywhere else in the nation. That includes Silicon Valley and all the other.
And Boston. No, I understand, because I know that was in Silicon Valley, Boston, and that triangle. Those are the biggest tech places in the country right now, right?
And it's an extremely reasonable place to live still. That's kind of changed. The population of North Carolina has doubled in the last 15 years.
Oh, listen, everyone in Florida, from our neighborhoods here, it's really wild watching it, folks. In Florida, it seems like everyone goes back and forth between Colorado and Florida. They have a couple houses, right? Now, and then it's Florida and North Carolina. Same deal. Yeah.
Yeah, North Carolina's got some awesome people here too, and it's pretty progressive place, believe it or not. A lot of people, I joke about it being in the sticks. And
I love Charlotte. Charlotte is just gorgeous, man. I just love that place, man.
Exactly. The beauty of it is you can be around some very sophisticated, very smart people and cool scenes.
Yes.
But you can also get out in the middle of nowhere pretty quickly.
How cool is that?
Do that kind of scene too. And the weather is, it's raining like cats and dogs here right now, but the weather is just generally, you get all 4 seasons and it's just a great place. But can we talk about gold for a second?
Yeah, definitely.
Now that we've talked about taking all the theoretical stuff. What we had talked about earlier about that deflation possibility, and like the things at the beginning of the year, it's like, man, who's going to win the tug of war on all these topics,
right?
And what does that mean for the broad markets? Gold, there's a, when I look at gold and I say, the dollar's rallied like crazy, and it seems to me it could actually go higher. It's a relatively safe place to put money still.
Yes.
Discounting all the debt.
Oh, that's it. Listen, there's no doubt, right? It's particularly...
So you could look at gold like it's hanging in there, or you could look at the deflation side of it going, you know what? I don't know if there's much hope here. So,
because what John's saying, and this, folks, when you trade gold, okay, what ends up happening is that I'm going to cut to the chase of what he's really saying here. And he's being kind to me. That's what he's being, okay? So right? Picture this.
All right,
Picture this, okay? We've been going sideways for a long period of time in the gold market, right? So when you do that, in general, that's very dangerous because, we're at lows, and it's like, okay, man, we know that they can smoke gold and silver. If one commodity they can smoke, man, they can take that south. So, listen, I heard you talking about it this morning, too, and I agree. I think it's going to hold, but I agree absolutely with the concept. We know that, man, they can take it, and if they decide that they're going to take it, well, guess what? They're going to take it, so.
Yeah, But, you look at it and dollar's rallied pretty good and this thing's hanging in there and why is it hanging in there? Why isn't it already gone south in a big way? I think gold's just going to stay really volatile and a trading instrument for a while. I don't know how big of an investment vehicle it's going to be for a while, but there's going to be some great opportunities to trade this thing.
Well, watch this. If I do this way, 1060 divided by $5, that 212, let me just see this, 212.
Can we keep talking while you're doing long division?
Sure, times $5. Yeah, so, well, that's a lot of cups of coffee, I guess. I was going to say, but when I look at gold, I'm looking at it and saying to myself, okay, what happens is that you're at 1060. It takes 10 tons of dirt on average, folks, to make 1 ounce of gold. So when I look at that, I says, you know what? That's not a bad bet right now. So we'll see though, in the context of other things. What other things when you start adding up things? It seems like $20 bills aren't anything anymore. If $100 bills are getting close to not being anything. You can't go anywhere without spending a couple $100.
Yeah, there's that aspect of it too. It's like who's going to win here? So, yeah. You want one of my favorite trades. You want those? You want me to throw one out there?
Yeah.
All right, Aussie dollar. In the midst of all this.
Yes.
Man. Don't back the truck up on it, but I actually think we can get above 74.
Now, see, this will be huge, folks, because the Aussie dollar, now it's also cool here, the Aussie dollar, has got killed. This has been a one-way trade.
Yeah.
And, it's pretty dramatic. You're talking about it's gone from, I think, 105, right?
It may take
107.
even longer, just like before that yen popped like it did. Well, this is a little different situation, but this is something that's basing very well. I normally don't like to kind of bank on something basing, but with the relativity factors that are all out there with the commodities, the dollar, a couple other things going on, I love the way this thing's acting. I've been talking about it for a while, and it actually is showing itself as even a better candidate to go past 74, 74 and a half, and even higher. I think it could actually get up to almost 80 at some point soon.
And that's going to be intriguing, because what happens, folks, is that that's a commodity country,
Yes.
So there's a differential on that. And, I've heard you've been talking about the Canadian dollar, and, the Canadian dollar, bottom line, folks, has been extraordinarily weak. And I can tell you fundamentally, John, what has happened. We have a lot of short-term units down here that we rent, and most of them are about $3,800, $4,000 a month. Well, what ends up happening is that for a Canadian now, that $4,000 a month is $5,400 a month.
Yeah,
big number within 1 year.
I hear you.
Yeah.
But they've amassed so many problems down there, or up there.
Yes. No, I'm with you. Right.
That it's gonna, even if oil turns around, it might take a while for this to actually catch up with it. And I still think it's a great relative strength trade, or relative weakness trade.
No, there's no doubt, man. Listen, the Canadian dollar always used to be 60 cents on the dollar, right? That was for years until 2001, and then start getting a lot stronger. Can you hang with me?
Sure, man.
Awesome, man. You stay right there. John Logan, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. Dow finished down 117. NASDAQ off 42. S&P's down 17. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with our man, Mr. John Logan. Now, as you come over to our website, folks, you're going to see right in the carousel the Taz Profile Scanner Plus. You can test drive this absolutely free, 14 days. Each and every trading day, 8 o'clock in the morning, John kicks us off. He will walk you through what the markets have done overseas as well as what we're looking at in the U.S. It's an outstanding piece of software. Go over, try it over the weekend. You can have plenty of time to take a look at it. He has got a lot of great videos right with this so you can understand how this works. And, of course, then listen to him every day. You'll just be in awe, folks, okay? Because it's an amazing piece of software.
Let me make a footnote to what you just said. Yeah, the educational side is, I've promised everybody in the den and you know, some people that have called in, some religious watchers of the show, which I really appreciate. I'm taking the time over the holidays here to do two things. One of them is to finalize getting these charts in the scanner, which we've been talking about for a while. I'm going to my futures section. I'm going to pull up, for instance, gold here.
Yeah.
And as you can see, I don't know if you can see this. We've got a visual now with our profiles and things like that. We'll have all those in. Every instrument in here will have, you know, our profiles in there so they can visually check these as the scanner spits out opportunities.
Look at how pretty that is. Yeah.
Yeah. More importantly, I'll be able to finally do an educational series on this. Pretty deep too. I've got, you know, a lot of them done already, but I wanted to have these charts so nobody would really have to go away from the scanner to get visuals on price relative to what the scanner is actually spitting out those opportunities based on. So those are two cool things that are going in, and I just really appreciate everybody being patient with me on that. It's just been we've added so many cool features into this scanner, you know, in the past, 6 months, and we're pretty much finished with it finally, and I'll hopefully be able to teach people how to pull some points out of the market on a daily, weekly, and monthly basis with these videos.
Folks, what's so cool here, okay, is that, you know, when you're in the finance business, there's lots of software, there's lots of charts, there's lots of all of this, okay? And when you listen to John in the morning, you're going to realize the passion that he has inside this piece of software he has. Well, let me tell you something, right? I remember when I look back in my own history, what happens in this business, I think, in general, John, right, is that, you know, you're trading for a long time, you find something, and then a light bulb goes off, and you say, oh, man, this is dynamite, okay? And you look at it, and you get certain things out of each one of them, right? The bottom line is that this piece of software is phenomenal. I mean, when I hear you in the morning, I'm sitting there, and I know I'm at my kitchen bar, do you know what I mean, banging away. And I'm hearing you. I'm saying it's a while. Bridget's saying, yeah, that's Logan again, right? No, because it really is, man. I mean, it really makes things so simple. I mean, you know, it's awesome, man. It's just an amazing piece of software.
We got to shift my show to the afternoon so I'm more awake.
Oh, you do? You kid me? No, you're perfect, man. No,
well, listen, you know, the scanner makes it easy. I mean, I hate to discount everything, but anybody could do a show with this scanner because it's going to be able to put the wins on the board, keep you out of trouble, and, you know, just be able to kind of maneuver through the minefield, even on a intraday basis, or, you know, daily, weekly, monthly basis, depending on. I hate to, you know, sound like a salesperson, but it really does have a lot in it for different types of.
No, it does. It does. And what you'll get out of listening to a show in the morning, folks, is this. Is that what you're going to get is that, depending on where you are in the cycle of trading, okay, there's certain things in here that you're just going to, it's black and white, and that's how you should use them. Then when, you know, let's say you've been out here for a couple of years or something, and you really start understanding it, then the subtleties that John explains inside of this, that you can get a huge amount of information out. And what I've always liked, John, I think not just in trading, you know, in life in general, I've actually found out I can get more out of things that are not working as they're supposed to work. You know what I mean? It's like,
right.
It's like, oh, hold it, man. You know, and it's always intriguing, man. You know what I mean? And when you're getting new profiles set up in here, that is a huge deal because it's like, oh, hold it, man. What's going to happen? Well, guess what, folks? You can wait to see what happens, but you know that something is going on inside the marketplace at that particular point because it's picking it up.
Yeah, and you coined it so perfectly. It just like this morning on the S&Ps.
Yeah.
And again, we've had a big run up, and I don't know who in their right mind would continue to buy this thing. But we were above profiles. I think was it closed yesterday? But based on, you're talking about innuendos, based on kind of seeing the movie before, and we've had these big run ups, and we're thinking, okay, well, we closed above, but let's just wait at least for a retest here. Let's wait until we classical kind of the way we look at these profiles.
Sure.
We've got to close above. Let's wait until we at least just pull back to, and where's that pullback point? Where's support? The neighborhood of 2057. We kind of magically like magnetized down into that area. Again, I'm not a big fan of trading a lot around this type of holiday season or whatever, but it really was something. If you're going to try to buy support, where do you do this? It put that inflection point right on your radar screen pre-market. So
big time.
So, and again, I like to kind of surf the globe and see what things are doing relative to our profiles. It's got that in here, and I'm showing it right now. And again, I haven't done a great job of kind of explaining things.
Stop saying that. You've done an amazing job, man. Stop.
That's what these videos are about, though. And I was trying to wait till we got the product.
I'm going to get a bunch of dots and throw them at you in those videos. No. Stay there for a second.
Okay.
Hey, we have Frank from Gloucester. Happy New Year, Frank.
Hey, same to you, Tom.
How you been, man?
Oh, a little frosty up here today.
I heard. You guys went from 60 degrees Christmas, and is it like 40?
Yeah, we had lunch on the patio on Christmas Eve. And,
I saw that picture, man. That's a great. I saw that. That was awesome, man. Yeah, totally.
What are you gonna do?
Totally.
Hey, back to reality.
Yeah.
Hey, speaking of reality, I'm looking at the Dow Transports.
Okay.
And boy, that's had a pretty bad month. If you look at the monthly chart, you can see that December's monthly candle has broken below the swing low of the August low.
Yes.
With about 8% higher volume.
Yeah. And, my take on the transports, folks, like this, okay? So when you look at the transports, basically have been leading the market. And the transports, if you take a look at this, this baby broke down with conviction, and it broke down in April. Now, the trend that it broke, the trend it broke is the trend that started in November of 2012. So it's like, hey, you're at 7,500. Well, 5,200's game. That's a big number, man.
5,200, you said?
Yeah. That's the big.
Okay.
That's where that trend started. 52 is the high, 48 is the low, and so that's the first one. Now watch this. When you take the larger one, what we haven't broke yet is the larger trend. Now we're right at it. The larger trend, but the larger trend is like 2,800. The larger trend is that you've come down and you've hit the line. We're right at the line, and it has big volume.
Yep.
And I think, just hang with us a second, Frank, all right?
Sure.
Awesome. We got Frank from Gloucester. We got our man, John Logan. And our phone number is 877-927-6648. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking about Mr. John Logan and Frank from Gloucester. We're talking about the transports. And you know what's intriguing here, Frank, is that inside the transports, you get the rails, of course, you get the truckers. Let's go look at the truckers. So the rails have got killed. The truckers, let's see, I'll pull up JB Hunt. Yeah, the truckers have got killed too. Let's see. So JB, no, it's not bad. The truckers aren't bad. Okay, so the high in JB is 90. You're at 73, and the airlines, they're close to their high. The FedExes of the world have got killed. So it's like that rail business, has got taken south, and I suspect that has to do with commodities and coal and all of the above. You know what I mean? And fracking. Well, it's fracking. They used to be. Do huge sand on the way in and oil on the way out, man. So.
Oh, okay. Yeah. Well, what do you see? Do you see it bouncing a little here before it takes the plunge?
I think that what you're going to have here, I wouldn't be shot here right now. It'd be nice if I could get a little higher. I mean, that's the reality. But once it broke the 74.52, it's like. That's to me. This looks to me okay. So on volume, this is Monster ABC down. The A point is 83.58. Your B is 74. So you got 83.50. So we get what? Almost 900, which gets to 6,800. That's how that's set up, man.
Yeah. Okay. It's just got to get up to C.
Yeah. Cooking, brother.
All right. Thanks.
Have a great New Year.
Bye-bye.
Thanks, man. And, folks, when we were talking sectors, remember something that as you test drive the TAS scanner, what happens is that you can drill right down. You can look at the ETF structure, and then you can drill down underneath those. What's amazing, John, is that when you think about how the rails were so strong, and then could you imagine you lose both? You lose the sand going in because they're not fracking anymore. You lose the oil going out because so many wells have been shut down. It's pretty intense. And never mind the commodity aspect. We'll see how that shakes out.
Well, it's interesting you brought that up, and it was wild how that guy called about this. But I was talking to, I have a very good friend who I actually met the other morning. That's why I missed the show. He owns an oil company in the western part of the state.
Okay.
And I was like, well, what's the volatility of the price of oil and all the other things going on. And I was like, you got to be able to maybe make some more money here. And he goes, John, this is awful what's going on. He goes, our margins are 18%. So if oil's trading $100 a barrel, you know, as it goes down to $30 a barrel, he goes, the margins stay at the same price, or stay at the same level, and you know the price is predicated.
The number's much lower.
Yeah, and he goes, man, we're just getting killed right now. And I'm just thinking, like, as that got called and everybody else involved with this commodity pullback, it's just cratered all the margins, you know. Yeah. And nobody's escaped from it. You know, so
and listen, you can see it. There's no doubt, man. So how's the soybean market doing? I know that last time that I was listening to you, they thought that there was so much
Well, how cool of an indicator is that? Because if just on the spot, somebody like ADM or Cargill or Purdue or whoever is going to say, you know what, we've had some long-term relationships, we're getting killed so bad, and everything's just going to hell in a handbasket as far as the quality of beans right now. Yes, we don't care if you got a million bushels in the silo. We're not gonna honor what we told you we're going to give. We're going to have to shave everything off 25 cents a bushel, and we're sorry about that. I mean, that is wrong for starters.
That was intense when you were talking. What we're saying, folks, is that picture the farmers have their crop inside the silo. They're expecting a certain amount, and they got a lot lighter. Hey, listen, brother, man, it's always a pleasure. Look forward to the show tomorrow, and we're going to kick off a great new year, man.
Very cool.
Thanks, man. Have a great one. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great one. Have a safe one. Look forward to speaking it tomorrow right here. Go get them, folks.